Good morning. Welcome to your daily morning digest for Tuesday, February 17th, 2026. I'm your host, and today we've got an action-packed episode covering major moves in crypto, some surprising economic rebounds, and incredible stories from the Winter Olympics and the world of chess that you absolutely won't want to miss. So grab your coffee, settle in, and let's dive into what's making headlines around the world. Let's start in the cryptocurrency space, where we've got a fascinating development. Nexo, the global digital assets wealth platform, has officially returned to the United States market. Now, this is significant because Nexo actually exited the US back in 2022 after clashing with regulators and ultimately paying a $45 million fine to settle charges with the SEC. The company was accused of offering an unregistered crypto asset lending product called the Earn Interest product. At the time, Nexo agreed to a cease and desist order without admitting or denying wrongdoing, and they began phasing out all their products and services in America. So why the comeback now? Well, Nexo says their return follows what they're calling a period of significant change in the US regulatory environment. They're partnering with Bakkt, a regulated digital asset platform, to provide a US-compliant framework for their investment products. What's really interesting here is that Nexo is capitalizing on what appears to be a more crypto-friendly stance from the current administration. This marks a major shift in how crypto companies are viewing the American market. After years of what many in the industry called regulatory hostility, we're seeing platforms that once fled the US now carefully making their way back in, but this time with a lot more attention to compliance and partnerships with established financial infrastructure players. For everyday investors, this means more options for earning yield on digital assets, but it also raises questions about whether we're entering a new era of crypto regulation in America. Will more companies follow Nexo's lead? Only time will tell, but this is definitely a story to watch. Now, speaking of crypto, let's talk about what's been happening in the broader markets, and it's not pretty. Bitcoin has fallen below $70,000 for the first time in months, trading down to around $68,000 as the entire crypto market nurses a painful 4-week losing streak. February 2026 is shaping up to be one of the worst monthly performances in Bitcoin's history, putting it in the same company as November 2022 when FTX collapsed, June 2022 during the Terra Luna implosion, and March 2020 when COVID first hit global markets. What's driving this brutal sell-off? Well, it's a perfect storm of factors. We're seeing forced deleveraging across the board as leveraged bets unwind. Remember all that excitement when President Trump was elected and crypto markets went on a speculative tear? Well, all those gains have now been completely wiped out. The latest leg lower suggests we could see Bitcoin heading toward the $60,000 to $70,000 range according to analyst firm CryptoQuant. But it's not just Bitcoin. XRP, which had been one of the better performing major cryptocurrencies, has absolutely tanked, falling 11% in a single day to trade at around $1.46. That's the largest one-day percentage loss since February 5th. The move pushed XRP's market cap down significantly, and some analysts are now warning that XRP could actually hit $1 per token sometime in 2026. For context, that's a massive drop from the highs we saw just months ago. XRP has already dropped 25% so far in 2026, and technical indicators are showing what traders call a death stack, trading below all major exponential moving averages. Here's the uncomfortable truth for crypto investors. We're seeing a crisis of faith across digital asset markets. The narrative that drove prices higher last year, the institutional adoption story, the Bitcoin ETF approvals, all of that excitement has given way to a much more sober reality. Leverage has been the enemy here, with cascading liquidations forcing prices lower and triggering even more selling. It's a reminder that while crypto markets can deliver spectacular gains, they can also deliver spectacular pain. Now let's shift gears to some more optimistic business news from Australia. Baby Bunting, the country's leading baby products retailer, has delivered an impressive first-half performance for fiscal year 2026. The company reported record sales and improved margins as their strategic initiatives gain real momentum. Gross profit margin rose 30 basis points year-over-year to 40.6%, showing that the company's turnaround efforts are actually working. Baby Bunting now operates 77 locations across Australia, and they're continuing to invest heavily in their store of the future refurbishments, planning to renovate 11 to 12 stores this fiscal year. What makes this story interesting is the context. Australian retail has been facing headwinds from cost of living pressures and cautious consumer spending. Yet baby Bunting has managed to carve out a niche with new parents who, regardless of the economic environment, still need quality baby products. This is a great example of how focused execution can outperform even in challenging retail conditions. The company has identified what their customers need, improved their product mix, and executed on store improvements. For investors, it's a reminder that well-run retailers with strong market positions can still deliver solid results even when the broader sector is struggling. Now let's zoom in on Hong Kong, where the Lunar New Year break has brought some encouraging news. Campers have been filling up campsites along the seashore in Sai Kung, near the famous Maclehose Trail. But here's what's really caught people's attention: there have been remarkably few signs of littering. This is significant because previous years have seen serious problems with visitors leaving trash behind at these natural sites. Campers from Guangdong province have been enjoying picturesque spots like Sai Wan Beach, which has become incredibly popular on mainland Chinese social media. Officers have been patrolling to monitor and prevent littering, and so far, the efforts appear to be working. Jiang Li and Wu Handing, a couple from Guangdong camping at Sai Wan Beach, described how they hiked from Po Pin Chau, known for its distinctive hexagonal columns rising up to 100 meters, and stayed overnight. This story matters because it speaks to changing behaviors and increasing environmental awareness among visitors. Hong Kong's natural beauty is one of its biggest assets, and maintaining these spaces for future generations requires everyone to do their part. The fact that we're seeing cleaner campsites during a peak holiday period suggests that education and enforcement efforts are starting to make a real difference. Let's talk about oil, because there's a fascinating geopolitical story unfolding here. Citi, the global banking giant, issued a report saying that while oil prices could remain supported in the near term due to geopolitical tensions, we might actually see prices fall significantly later this year if peace deals involving Russia and Iran actually materialize. Brent crude futures recently settled at $68.65 per barrel, up about 90 cents, but that's well off recent highs. President Trump has been ramping up pressure for peace deals, and if those actually happen, the logic goes that sanctions could be lifted and supply could flood back into the market. Citi's analysts are looking at a scenario where Brent crude could actually average as low as $50 per barrel over the next year. That's a dramatic call, and it highlights just how much geopolitical risk is currently priced into oil. Here's what's really interesting though. China has reportedly been buying oil aggressively while Russia and Ukraine sanctions remain in place, essentially stockpiling ahead of potential supply shocks. This creates a fascinating dynamic where current demand is artificially inflated by strategic buying, which could quickly reverse if sanctions are lifted. For investors and businesses, this uncertainty makes planning incredibly difficult. Do you lock in energy costs now at elevated levels? Or do you bet on peace deals bringing prices down? There's no easy answer, but Citi's research suggests that the risk-reward might actually favor lower oil prices later this year. Of course, that all depends on whether peace deals actually happen, and as we've learned from years of watching Middle East politics, promises of peace don't always translate to actual peace. Moving to the Middle East, let's look at Israel's economy, which has just posted some fascinating numbers. Israel's GDP grew at an annualized rate of 4% in the fourth quarter of 2025. Now, that might not sound spectacular, but context matters here. This comes after a post-war economic rebound, and it's actually down from the explosive growth Israel saw immediately following the October ceasefire agreement with Hamas. For the full year 2025, Israel's economy grew by 3.1%, a remarkable recovery from the meager 1% growth seen in 2024. What drove the queue for growth? A stunning 33% jump in exports. That's the power of peace, or at least the power of a ceasefire. When businesses can operate without the constant threat of rocket attacks and disruptions, economic activity rebounds quickly. The OECD, the International Economic Organization, has actually forecast that Israel's economy will grow at 3.3% in 2025 and an impressive 4.9% in 2026. That would put Israel's growth well above the global average. Of course, all of this depends on the ceasefire holding and regional tensions not flaring up again. What this tells us is that economic resilience isn't just about monetary policy or government spending. Sometimes it's simply about stability. When people and businesses feel secure, they invest, they hire, they expand. Israel's economic story over the past year has been a roller coaster, but the underlying entrepreneurial energy of the economy remains intact. Now, let's shift to something truly exciting, the 2026 Winter Olympics in Milan-Cortina. We've got an incredible story coming out of the women's freeski big air competition. Canada's Megan Oldham has won the gold medal in a stunning performance, knocking off none other than defending Olympic champion Eileen Gu, who had to settle for silver. This is Oldham's second medal of these games. At just 24 years old, the skier from Parry Sound, Ontario has now claimed both a bronze and a gold medal in Milan-Cortina. But what makes this story even more compelling is the family connection. Oldham was actually egged on by her older brother Bruce, who is also a professional free skier. You can imagine the pressure and the pride of competing at the highest level with family watching. Oldham's winning performance included two massive tricks in her first two runs that gave her a score of 180.75 coming into the final round. Despite Eileen Gu and the other competitors throwing down their best efforts, nobody could overtake her. For Oldham, this represents the culmination of years of dedication and the ability to perform under the brightest lights in sports. Now let's talk about Eileen Gu, because her story is equally fascinating. Taking silver in big air means Gu now has 2 silver medals from these Olympics, one in slopestyle and now one in big air. But here's what makes Gu such a compelling figure. Despite not defending her Olympic title, she was absolutely beaming with an ear-to-ear smile after realizing she'd won silver. As she put it, 5-time Olympic medalist kind of has a ring to it. That attitude says everything about what makes a champion. Gu isn't defined by just winning gold. She's defined by competing at the highest level consistently across multiple Olympics. Born in the United States but representing China, Gu has become one of the most recognizable faces in winter sports. Her ability to maintain perspective and joy even when she doesn't win gold is a lesson in mental toughness that applies far beyond sports. The freeski big air competition showcased what's possible when you combine incredible athletic ability with fearless creativity. These athletes are launching themselves off massive jumps, spinning multiple times while flipping, all while trying to maintain perfect form for landing. One small mistake means not just losing points, but potentially serious injury. The courage it takes to compete in this sport is absolutely mind-boggling. Speaking of champions, let's head to the world of chess, where Norwegian Grandmaster Magnus Carlsen has done it again. Carlsen has won the 2026 FIDE Freestyle Chess World Championship, defeating American Grandmaster Fabiano Caruana in a stunning final. This marks Carlsen's 21st world title across his remarkable career, adding the Freestyle Championship to his already incredible collection that includes Rapid and Blitz World Championships. What made this tournament special was the format. Freestyle chess, also known as Fischer Random or Chess 960, mixes up the starting position of the pieces on the back rank. This eliminates the advantage of memorized opening theory and forces players to rely purely on their understanding of chess principles, pattern recognition, and raw calculation. In other words, it strips away decades of computer preparation and tests who is actually the better chess player. Carlsen's path to victory wasn't easy. During the group stage, he scored 4.5 out of 7, which was enough to top the standings and advance. But the real drama came in the final against Caruana. According to reports, Carlsen actually won from what was described as a dead-lost position. He turned the match in his favor, and entering the final game, he only needed a draw to clinch the title. Caruana had chances to mount a comeback but missed opportunities in the late stages. What makes Carlsen's dominance so impressive is that he's been at the top of chess for well over a decade now. Most athletes peak and then decline. Carlsen seems to just keep evolving. Whether it's classical chess, rapid, blitz, or now freestyle, he finds ways to win. At this point, he's not just the best chess player of his generation. He's arguably the greatest chess player in history. The tournament was held in Weißenhorst, Germany, and brought together the absolute elite of world chess. For fans of the game, freestyle chess represents a potential future direction for the sport. By randomizing starting positions, it ensures every game is unique and tests pure chess ability rather than preparation. If Carlsen can dominate this format too, it only cements his legacy as the most complete player ever to sit across a chessboard. Alright, let's wrap this up with 5 practical takeaways from today's stories that you can actually use in your life, your investments, and your decision-making. Takeaway number 1. What's the regulatory environment? Nexo's return to the US isn't just a crypto story, it's a signal. When companies that fled a market start coming back, it means the risk-reward calculation has shifted. For investors, this applies to any regulated industry. Pay attention to when the tone changes because early movers often capture the biggest gains. Takeaway number 2. Understand leverage risk. The crypto meltdown we're seeing is a textbook example of why leverage kills. Whether you're investing in stocks, crypto, or real estate, using borrowed money amplifies both gains and losses. During the good times, leverage feels brilliant. During the bad times, it can wipe you out completely. If you can't sleep at night worrying about your positions, you're probably using too much leverage. Takeaway number 3. Execution matters more than the macro environment. Baby Bunting is thriving despite a tough retail environment because they're executing well. They're improving their stores, optimizing their product mix, and focusing on customer experience. You can't control the economy, but you can control how you run your business or manage your career. Focus on what you can control. Takeaway number 4. Stability creates economic value. Israel's GDP numbers show what happens when uncertainty gives way to stability. Whether it's a ceasefire ending conflict or just personal life circumstances settling down, peace and predictability are economic accelerants. If you're running a business or managing investments, understand that geopolitical risk isn't just abstract. It directly impacts earnings and valuations. Takeaway number 5. Mental resilience separates good performers from great ones. Eileen Gu's smile after winning silver, not gold, demonstrates something crucial. How you respond to setbacks often matters more than the setbacks themselves. Whether in sports, business, or investing, the ability to maintain perspective and motivation after disappointments is what determines long-term success. And that's your morning digest for Tuesday, February 17, 2026. Whether you're driving to work, hitting the gym, or enjoying your morning coffee, I hope this has given you valuable insights into the stories shaping our world. Stay curious, stay informed, and I'll see you tomorrow. Take care.